Welcome to Leaders of the West, a podcast for innovators and changemakers. I'm your host, Jessie Jarvis, the founder of the West, and I'm sitting down with agriculturalists, entrepreneurs, executives, and everyone in between with the goal of digging into the strategies, mindsets, and lessons that have been crucial to the success of ag and Western. Whether you're carrying on the next generation of your family's operation, starting something from scratch, or determined to climb up the leadership ladder, we're going to inspire you to continue to dream big, growing not just you, but the future of agriculture and Western as a whole. Let's go. Welcome to our October bonus episode with Justin Bates of Strategic Financial. And today we are talking end of the year finance tips. I know we're only in October, but when it comes to the end of the year, we cannot be the people who are worried about our taxes on December 30th. If that is you, which it's totally been me before, we're doing something wrong. So we're going to start thinking about this in October so that we are more than prepared before the end of the year. But that being said, if this is something new, if you're wondering, hey, what are they doing or what's going on over here? So today we're sitting down with Justin Bates. And for the next 5 months, we have a bonus episode that is coming out on the first Thursday of the month where we break down finance, basically, with the purpose of just wanting to bring more education around the topic, because we know for a lot of people in the world in general, specifically though in our industry, it can kind of be a little scary because you're not necessarily equipped with the correct financial information. It's not something that they're talking about in high school or middle school, which they should be, but that's beside the point. So we have these 20, 25-minute bonus episodes that we launch once a month for the next 5 months, just to kind of get you guys feeling good about your financial health, whether it's personally, whether it's for your business, your family, your children, maybe your farm or your ranch, whatever it may be. So with that, again, today's topic is end of the year finance tips. Justin, how can an individual set themselves up for end of the year tax or financial health? Because your taxes and your finances, obviously, they're very similar. They go together, but they are still a little bit different.
They are different. Obviously, they affect each other in one way or another. But when it comes to individuals, there's business owners and there's the individuals that work for somebody else. And so we'll start there. And to your point, the biggest part of it is just taking action to some degree, because what I've seen with clients that, we've worked with for years is in the beginning, it's more baby steps. But the fun part is each baby step leads to a little bit bigger step the next time. Then you knock out 2 or 3 of those, then it gets to a little bit bigger step. And that's how you grow. But that's also why taking those first steps, whether you're 20 years old or 80 years old, the hardest step of really maximizing your financial potential is the first steps, because they're generally the smaller steps that aren't going to make as big of a difference in a lot of cases. So it's not as much to get excited about.
Yeah, it's kind of like when you first start going to the gym and you're showing up every day. The first 3 weeks, you don't notice a difference. And that's frustrating because you're like, man, I've been so committed. But the results come 3 months after, 6 months after, a year after.
And then once you start seeing the results, then you're hooked. And you're like, this is awesome. I can't stop going. I have to make myself take a day off now. That's the exact same thing, as are most things in life, not just finance or working out. That's just about everything.
No, nothing worth having ever comes easy or quickly.
Correct. And so if we're talking about somebody that, let's say you're a listener out there and you have a job, you work for somebody else, a lot of the planning for taxes or making your financial situation better is already done for you before you even get your paycheck, that's a good thing. If there's a retirement plan where you work and you're utilizing that, maybe you get a match from the company where they're putting money into your retirement account for you as well. You're already doing the right things, and there may not be anything for you to do. You're already doing it. You're putting back money, saving for retirement, and you're good to go there.
Which I am going to say, in case this is the first time that somebody's listened to one of these bonus episodes, Back in September, we talked all about retirement. So if you haven't yet listened to that episode, make sure hop back over after you listen to this. We lay down all of the info on retirement. Okay. Now, didn't mean to interrupt you, but.
No, that's a very good point. I'm glad you did. A point to kind of take from that episode, the one point that is important, if you do work for somebody, you're taking advantage of your retirement plan through your work. Normally, if you look at what percentage you're saving, a lot of times that may be a small percentage, 3, 4, 5% of your paycheck. Look into your own personal situation and what your goals are. But for most of us out there, that's not going to be it. We're not saving enough at only 3, 4, 5% to get where we want to be, to where we can retire one day. So you need to do something outside of work as well. That's where I would recommend for a lot of folks, depending on what tax bracket you're in. But generically speaking, this is not a recommendation because I don't know every single situation of people out there listening. This is just something to get your wheels turning. Look into your own situation for yourself, or talk with a professional, have a one-on-one conversation with us, and we can help you get to the correct answer for you. But generically speaking, if you're in a little bit lower tax bracket, then starting a Roth IRA outside of your retirement plan at work is a great place to start. Why? Is because once you put money into a Roth IRA, which is just an individual retirement account, that's all it is. When you put money in there, you do fund it with money that you've already paid taxes on. But once you put that money in there, as it grows, all those gains that money makes is tax-free. And I've seen people that started Roth IRAs, when that have had them for years, and they've got a lot of gains in there. And when they're ready to spend it, they're not going to be cutting a check out of taxes for it. They're going to get to spend it. So that's a good place to start.
One thing on that, real quick, I know this is on the topic of retirement, but because we did just talk about this, at what age can you access that money? Just so somebody doesn't get excited and they think, oh, I can put money in here and rat hole it away and it's going to grow and I'm not going to get taxed on it. And then I can open it up in a couple of years.
Correct. So with a Roth IRA, the money that you put in, and I'm going to make up a number. Say you put $5,000 into it. Well, you've already paid the taxes on that money. So I don't recommend taking it out, but that money, since you already paid taxes on it, you can take out at any time because it's your money. You've already paid the taxes on it. But to get the tax benefits, you need to leave it in there for at least 5 years.
Okay. So keep on keeping on. A Roth IRA, if you are in a lower tax bracket, generally speaking, again, this is not advice. Go seek actual counsel from somebody who you trust, you're already working with, or Justin. Okay, keep moving forward.
So now let's go to the other side of it and say that you have a job where you're working for somebody, but you're in one of those higher, 32, 35, 37% tax brackets. All right. Well, now we're talking about a lot of taxes going out, and you probably make too much money at that point that you could even do a Roth IRA if you wanted to. There's restrictions on that. But if you're in those higher tax brackets, utilizing the retirement plan at work to where you're deferring those taxes on that part of your income is a good idea. But also for those that are in the really high tax brackets, even though you work for somebody else and you have that good high paying job, starting a side business of some sort is a great way to do it. So you can take advantage of more tax expenses, tax deductions. And again, this is something that if you're in this scenario, you're in a high tax bracket, you work for somebody else, you got a retirement plan at work already. This is something you really want to cover one-on-one with your CPA or accountant. I'd highly recommend doing that. But to give you an example, know a gentleman that has a very, very, very successful construction company. He's got his cattle as well. But his wife said, hey, we're not buying any more cows. We got enough work around here. Let's find something else. And so they loved going to PBRs, the bull ridings. They'd go to several of them per year. Their kids love it. They'd make that part of their little mini vacations throughout the year. And their kids love riding horses and things like that. So they were doing all these things already, going to PBRs, taking several small trips per year. They got their horses, their truck and trailer to go riding and stuff like that. So what he did was, he's like, well, why don't we just get in the buck and bull business, make it a business? And his wife thought he was a little bit crazy, but they did it. So now they own several bucking bulls, some big name ones you've seen on TV. But what did that do? Well, they still go to the same PBRs and take the same trips they were doing anyway. But now, because they're going there as a contractor, these are tax expenses. These trips they have to go on. Their trucks and trailers and stuff they have at home for their kids' horse and stuff, yeah, they're using them for that, but they have to have those to haul those bucking bulls around. So again, now there's things that they've spent a lot of money on anyway, but that
have now become a tax strategy.
And it's something they enjoy, so it's not really like extra work for them. So anyway, that's just a high level example, not getting off in the weeds on it. But where I've seen a lot of people that if they're working for somebody, and they're in those higher brackets, maybe you're a CEO or you're somebody like that, find something you like and enjoy. That if you can find a business on the side to where you can do a lot of things that you're doing, but have some tax advantages behind it, great. That's a great way to go about it too, and look into that.
On the topic of that, because I've actually talked to our accountant about this in the past, you do at some point have to make money on your business, because then otherwise they call that a hobby. Isn't that correct? That after a while, if you're not making any money on your business, then the IRS, that kind of is a red flag. So just know you will at some point possibly have to make some money on your business.
Yes. And like with the bucking bulls, they've, using that example, they've made some money with their bulls too. So it's all good. But that's more to get the wheels turning, talk with your CPA and let them go over all the details of it. But real estate, for example, is another one. A lot of people that, they'll go out and get rental properties or storage facilities, things like that, they can depreciate down, but still making money at the same time. So look into those type of things. That's a great place to start.
Okay. So for those of our listeners who are already business owners, there are obviously some specific tax strategies or financial things that they can be doing before the end of the year, or just to prepare themselves for the end of the year. But when we had talked about this previously, you had a better way than I did of framing this. So this is a two-part question. What happens if you are the owner of a young business? How can you set yourself up for end of year tax help? And then what do you do if you are maybe an owner of more of an established business? Because again, you guys, as far as listeners go, I had these questions framed as what if you're somebody who's young and what if you're somebody who's old? And Justin said, let's position it more of you own a young business or a more established business. Tell us why you thought that was better.
Based off of the most common things that we see every day. And, to help encourage enough people listening to go and make a positive impact for yourselves, I'm going to go with what do I find that's the most common thing that we see each and every single day. And for the young businesses, that maybe you're still in the growth mode, et cetera. We work with a ton of business owners and we love to be advocates to help them. And we'll be the first to say, hey, we're not going to have anything better for you than you owning a personally owned successful business. How can we grow that? One thing that is super, super important that the best business owners I've ever seen, the one thing that they all have in common is they are very, very good at completely separating their business from their personal lives. They treat it completely separate. There's no intertwining whatsoever. And the reason why that's so important and how that can help, whether it be taxes or finances, is how are you going to know how to make your business better, more efficient, and grow, which means you get more money, because the whole goal of owning a business is we want to get money from the business and pay ourselves from the business into our personal account so we can enjoy it. That's why we own a business. The way to do that and get your business going as successfully as possible is to know your numbers. And so if you're a business owner out there that's, hey, if you need something and you're out and about or you're going out to eat on a Friday night, forgot your wallet, but you got the business card in the truck, so I'm just going to use a debit card for that, whatever. Or if you're buying things and commingling accounts, or I've run into some that don't even have a separate business checking account for the business. Well, how are you supposed to know what your expenses are, what your revenue is down to the penny, and know where you can make it more efficient and increase how efficient your business is running if you don't know your numbers of your business? And if you've ever listened to, and I'd encourage people to do this, if you ever listen to like an earnings call from a CEO of a Fortune 500 company, even if you don't care about that stuff, if you're a business owner, go and listen to one of those sometime. They know, even though they may be these $100 million businesses or $1 billion businesses, they know their numbers to a T. And they look for every opportunity to make, that's why they're good. That's why they're good CEOs. So even if you're a small business owner, know your numbers. That will pay dividends. And in the long run, if you know your numbers and you're working with your CPA on it, et cetera, that's how you're going to pay less in taxes. That's how you're going to have your income from the business go up. That's how your business is going to grow. And that's how you're going to get to spend more money from it, is by treating it as a business, being professional about it, and knowing your numbers.
Well, I will also say too, having strategy behind it. Like for us, for example, we work with our accountant, not just to do our taxes. He's not like a tax prep guy. It is to make strategic decisions throughout the year so that we are ready and we're not buying a bunch of things on December 31st because we don't want to pay taxes on this. Like, we have to be strategic about it throughout the year, which again goes back to that, just being very aware of your numbers and being prepared.
Correct. And it's funny you say that. I had a call with a client the other day. He's a younger business owner. He has a successful business. He has cattle. He has a poultry farm as well. So he's got 3 different businesses going on, really. And he called me, this has just been 2 or 3 weeks ago, and he said, hey, talking with my accountant, and he said that I need to spend some money. I'm going to make too much this year. I'm like, well, buddy, it's only July, is he's already saying that? He's like, yeah. I'm like, hey, first of all, that's awesome. That means you're making money. I'm like, well, what do you want to spend it on? What'd y'all come up with? He said, well, he didn't really say. So I'd thrown out, I might go get a new truck. I'm like, okay, do you need a new truck? He said, to be honest with you, Justin, my truck's only 2 years old. I like it. I don't need a new one. No. I said, okay, well, what else did you come up with? He said, well, may go buy another tractor. I said, all right. Do you need one? No. I'm like, well, are you planning on expanding or maybe getting another lease and, buying more cows and stuff where you need one over there? He's like, no, I don't. I said, well, what if we do this? Because we've all run into the farmers and ranchers that's kind of always been the mentality. We either spend it or we give it to Uncle Sam. And that's what my granddad and people, just what they always did. But, I think a good question for business owners to ask themselves is, when it goes to spending that money so you don't pay taxes on it, are you spending the money on something that will in turn make you more money, or are you putting it into a depreciating asset?
Yeah. Are you investing it, like truly investing it in your business? Because an investment, the goal of an investment is to make money versus something you're just spending to spend. That's not necessarily the best idea.
Correct. And, we ended the conversation with this guy, and the tractor is such a simple explanation is, he had 2 tractors already. And so I asked him, I said, if you got a 3rd tractor, will your farm make more revenue next year? He said, no, they'll do the same whether they have 2 tractors or 10. I said, okay, well, in that case, I probably wouldn't put money into it because that tractor is just going to depreciate in value. But going the other route, if he would have said, well, there's this other lease I want to pick up, which in turn, it's 40 miles away, I'd need another tractor out there. That would make sense because that new lease should make him more money. So that's where it would make sense. So that's what I'd be mindful of, is really focus on knowing your numbers, number one, keeping your business completely separate from your personal life, drawing that line in the sand between the two. And then when it comes to when you do need to spend money to save on taxes, really ask yourself, am I putting money into a depreciating asset just so I don't have to pay taxes this year? Or am I putting my money into something that will save me some taxes this year, but 5 years from now, 10 years from now, I should have more money because I did that. Look for those type of things is what I would encourage folks to do.
Such great advice. Okay. Oh, established business owner. If you're an established business owner, we've only got a couple more minutes, but what advice or end of the year finance ideas would you give them?
Okay. If it's a more established business owner, they probably, all the things as far as we may have put them to sleep with the previous part of the conversation, because they're probably doing all those things really good already.
Everybody wake up. This is for you.
Yeah, there you go. This is for you. So the most common things I run into here is people have really good businesses. They get to a point where when it comes to succession planning, they get behind the 8 ball on that. They know they should be thinking about it, but they don't have those conversations until they're ready to sell the business or pass it down, etc.
We just told everybody to wake up, and you said the word succession planning, and now they are back asleep. They've turned us off. Like, this is probably critical or probably common in all industries, not just ours, but especially ours. For whatever reason, this is not a conversation that people want to have.
It's not fun to talk about, but it's something that needs to be talked about. And that may be conversations with kids. It may be conversations with charities, maybe conversations with an employee you have that is wanting to buy you out of your business, etc. So getting started on those conversations is one that most, for whatever reason in our industry, tend to put off till right when it's crunch time. Other things that I run into is protecting your business, especially if it's successful and you got it running along good. I talk to so many owners and I ask them the question, let's say that we have a business owner they're the only employee, they own it themselves. What happens if you become disabled? What happens if you can no longer go in there and run that? And a lot of times the answer is, well, it probably wouldn't go too good. Because I know what it's like whenever I take vacation for a week and I come back. I'm like, all right. So looking into things like a business overhead expense policy or a disability policy, things of that nature, to where, and I've got a veterinary client that asked them the same conversations. And she said, basically, my income would stop if I wasn't here because I'm the only vet here. And she's got a staff of like 6 that depend on her as well. And so what would have happened is that, and we've all heard these stories of something like that happens, and then it runs into a fire sale on the business, or somebody will come in, in this scenario, another vet would come in and buy out the business, but they know that it's in trouble, so they can get it cheap, versus if they would have had something in place where, hey, I've got money coming in, I can go and overpay to have another vet come in here ASAP, keep this thing just humming along and get top dollar for my business. Things like that, or just to keep the doors open and running until somebody gets healthy. Focus on those type of things that, again, they're not fun to talk about, but they do happen.
Well, and I think that that's especially critical advice because for those listeners, we are in an industry where we are an active participant in our business, farmers, ranchers, veterinarians, welders. If we are unable to work in our business, 1, that's a very common thing, but 2, then we're not going to have a business. And again, back in that retirement bonus episode that we did last month, we talked about how having a business can kind of be part of that retirement plan. So if you're putting your eggs in the basket of that, and then, lo and behold, you can't work anymore, that wasn't a very great retirement plan. So see how all of this goes together, all of these conversations. I know, Justin, you're just over here nodding your head like, yeah, Jesse, that's why we're doing this. But that's why I'm excited to do this, because it does. I just love this. I love where we're headed with that. But protection, that's kind of what it boils down to if you're an established business owner, is protection.
And the fun part about working with the business owners that are young businesses, I should say, they're fun to really help them take what we've learned from people that have been there, done that, and grow their business. And then with the people that have established businesses, what's fun about working with them is I don't have to tell them how to make money. They know that already. I don't have to tell them about the other stuff. They know how to do that already, but it's really just kind of give them the nudge, say, hey, you worked your whole life to build this thing. Let's go ahead and take a little bit extra time to make sure we protect it and make sure whenever you're done with it, you get compensated for it as you should for you and your family. And that's really the nudge on there, because these things don't have to be that difficult of conversation. It's a lot more simple than what people realize if you just get the education and get in there and get it done. And I promise you, everybody that I worked with, once they do these things and they focus on them, they get them in place to where when their head hits the pillow, they know if life doesn't go perfect, if life throws me a curveball, I'm prepared for it. It's a really, really good feeling. You can kind of see just a lot of the stress and the pressures come down when you talk to them. So it's a really good thing. The one last part that I'll throw out there, that I'm sure there's a lot of listeners out there that may be in a partnership.
Oh, yeah, great.
Maybe there's 2 or 3 business owners, and focusing on, do you have the buy-sell agreements in place? Do you have those strategies in case one partner runs into a situation where they need to exit the business, or if there's an unexpected illness or death even by one of the partners, how do the other ones, how does that family get taken care of and the other business owners are able to buy them out, things like that. Again, those are very important conversations to have. That the nutshell of the last 2 or 3 things we've talked about, the most common thing I see is, while everybody agrees, and this would be a good ending point, every business owner I talk to agrees that everything we just discussed are extremely important. Yet it's the most common things that they say, I know I need to do that. I've been thinking about it for years. I just haven't done it. Let's get in there and do it.
I love that. And you guys know that is a motto of this show. We're not waiting till tomorrow. We're going to start today, because tomorrow, 1, sometimes it doesn't come, but 2, rarely do we actually do things when we say we'll do it tomorrow. So, Justin, if somebody is listening to this today and they think, man, I want to work with Justin Bates, where can they find you?
You can give us a call at the office. We're, as I said before, we're out of good old boys from the Midwest here, 417-823-3810. We got an awesome team here of individuals. I just love them all to death. Such a strong team. You can shoot me an email at jbates@thestrategicfinancial.com, or just reach out to Of the West. You all obviously know how to get in touch with me as well, and go that route, and we'll be happy to help. We love starting everything with a simple conversation and see where it goes.
Awesome. Well, Justin, thank you so much for today. You guys, we will be back here next month, November, Thursday the 7th, a couple days after Election Day. And we will be back here with another episode dedicated to your financial health. So with that, thank you guys for being here. Thank you guys for listening. And also, if these conversations have been helpful to you, chances are they're going to be helpful to somebody else too. Do us a favor, share these with people who you think need to hear them, because that makes a big difference for all of us. So thank you guys. I hope you have a great rest of your week, an awesome weekend, and we'll be back here next Tuesday with a full-length episode. And then again in November on the 7th with the next financial bonus episode. We'll catch you then.
If you loved this episode, do us a favor and share it with someone else who might find just as much value in it as you did. We're on a mission to continue to grow and strengthen the future of agriculture and Western industries, and you spreading the word helps us make more of a positive impact. It also makes a big difference when you take a minute to go rate and review the show. We can't thank you enough for listening, for sharing, and for loving Ag and Western as much as we do. We'll see you back here for our next episode.